All right, you're all welcome to the synthetic mentorship. So this is a mentorship, right, that is meant to help those, right, who are either struggling to find their model, right, or probably don't have the means to enroll for a mentorship out there, right? This is something you can easily work with, grow with, right, and um frame your strategy from, right? I'm not going to be teaching a specific strategy. I'm just going to teach you the very basics, right? That's what that moves the market, the synthetic market. And then from there, right, you bring everything together yourself and create a strategy from it. On the other hand, you can also decide to, trade only structures, right? Which is mostly what I'm going to be showing you here, structures and liquidity, right? You can decide to also do that alone and you'll still end up being profitable, right? So with that being said, let's get into business, right? So here are the topics that we are going to be treating, right? For this mentorship, right? I'll be dropping every topic. I'll be dropping each topic, right, every week, right? One topic per week, one topic per week, one video per week as well, right? So the first topic, right, that I'll be talking about today is understanding structure, right? So I'll dive deeper into structure, complex and advanced structure. This might be quite familiar with some of you, right? So I'm going to rush through the drawings and then go quickly into the charts to show you these structures, right? So um our next topic, right, is going to be premium and discounts. And under premium and discounts, we'll be talking about the rejection block, right? The order block, right? I'll be showing you types of order blocks, right? The voids, right, which are imbalances and the rest, fair value gaps, and the breaker block, right? Because these are the main array, right, that you're going to be needing on the synthetic markets. So the next topic is going to be liquidity in the synthetic markets, right? This is where I'll introduce you to more of liquidity, how liquidity drives the synthetic market as well, right? And then followed by the higher time frame and lower time frame narratives, right? Now, here's the reason why I say I'm not going to be teaching a strategy. I'll just teach you or take you through price narrative. That's because if you understand narrative, right, um, you know the reason why patterns are being made. So I see a lot of people trading patterns, right, Cosimodo and the rest, and don't really have a solid reason why those patterns are occurring, right? So I will teach you more of narrative, right? Higher time frame and lower time frame narrative, and then we'll get into the last one, which is time frame combination, right? Time frame combination. So I think this time frame combination, I'll teach you a little bit on entry, right? An entry model that you can also use, right? So get your pen, right? Your writing material and get ready for the mentorship. So let's start from the first one, right? Let's start from the first one, understanding structure, right? So I'm just going to, like I said earlier, I'm just going to show you a quick sketch and then we get into the chart because I believe the chart is where you're going to find most of the work, right? The chart is where you're going to find most of the work. So understanding structure. So you all know that price or what they tell you out there, right? That price moves from series of higher highs and higher lows, right? What they usually tell every new beginner or every trader that is about to start any mentorship, right? I'm sure a lot of you are familiar with this, where price creates a low, right? and then a swing high, and then a corrective move, and then an impulse move to the upside, a corrective move, right? That indicates what? Bullish market structure, right? But in this session, right, we're going to be talking about the more advanced market structure, which are structures that includes liquidity zones, right? Though I'm not going to be talking about liquidity here. I just want to introduce you to how these structures are being formed, right? And then how you should pay attention to them. So, okay, I'm just going to add one more. Then we have it. So let's talk about this, right? So some of you might be familiar with this, where you have your what? Your break of structure, right? Where you have your break of structure, retracement into this zone here, right? Could be your demand zone or your point of interest, right? And then you have something like this as well. Then this being what people call the inducement or an engineered liquidity. And then we have a break right here. So the reason why I'm going over this is simply because not everyone might be familiar with how to use this on the synthetic chart, in as much as everyone knows this, right? But can you actually use this on the synthetic chart, right? So you have this here, right? Then you have your what? Engineered liquidity, and then move to the upside. So this is your what? Or to an extent, this is how structure is being presented on a real market condition, right? You're not going to have it as higher highs and higher lows. You're going to have it as higher highs, and then lows, right, being rated. And the reason why those lows are being rated, right, when we get deeper into liquidity, you understand that the reason why those lows need to be rated is because price needs, I do say price needs more fuel, right? Those liquidity, these levels of liquidity are more like a fuel, right, to move price to a direction, right? So this is your words, perfect market structure, bullish market structure to the upside. This is your bullish market structure to the upside. Now, how do you trade this, right? When we get deeper into higher time frame narrative, time frame combination, liquidity, and all of that, you're going to see it. But how do you see this on a live chart? Forget about this drawing, because anyone can just take up his trading view and then mark all of these up. But how do you see it on a live chart, right? And interpret it, and then actually know that, okay, this low is going to take out this low, right? This is going to take out this low, or this one is going to take out this one. How do you interpret it to know, okay, which one are we going to use? What level or what leg are we currently on, right? Okay, before we get into that, let me also explain something, right? So it's something I see a lot of people. I've been correcting my students as well. So I'm just going to add this to it, right? Something I see a whole lot of people doing, a mistake I see a whole lot of people doing, right? And it just shows that a whole lot of people don't understand structure, right? I even saw someone on X here on Twitter making that same mistake, but I just had to pass, right? No need for correction so that you don't say you are being toxic, right? But let me just use the opportunity to correct that here. So this is your structure, right? You're just going to give both bullish and bearish. So this is your structure. This is your structure. We had what? From a bullish delivery to a bearish delivery. So we have price creating series of higher highs and higher lows, taking out engineered liquidity, right? Engineering more liquidity to push higher. And then we have price creating series of lower lows and lower highs, right? Now, take a look at this. We have what? I'll teach you this as well. A shift here, right? We had a shift here. I think I'm just going to annotate this. Okay, this should be at the center. So we have a shift here and then a retracement, right, into probably a supply or a bearish order block, right? Now, you agree with me that the rest of these here, I think I'm just going to mark them. I'm taking my time for this structure. A structure class is a class I always want to take my time because it's the foundation by which you'll be trading with structures and liquidity, right? So all of these here are your break of structure. All of these here are all break of structure, right? We all agree that these are your break of structures, right? To the downside. Now, here's a mistake I see a whole lot of people do or make, right? Now you have a structure to the upside. You had rather a structure to the upside. I'm just going to drop this here. Let's make this smaller. You had a structure to the upside, right? Which means price was creating higher highs and higher lows. And then you finally had a shift. After the shift, price gave a clean reaction, right, from this point of interest, and then sold to the downside, breaking structure. What does this tell you? This tells you that, okay, we now have a reason to go lower. We now have a reason to go short, right? So if we should have a reason to go short, what should we be looking out for? More short opportunities, more selling opportunities. Now, what I see a whole lot of you do, right? In as much as price has created an intent to go lower, I see some people still making this, still marking this. Let's use this. I'm just going to take this one off a bit. Yeah. I still see some people marking this, right? Marking this. And then using this, yeah, as what? As their so-called inducement, right? This is why I said I see a whole lot of people drawing patterns here and there. But it's not about the pattern, it's about the narrative. If you don't understand price narrative, all these Osimodo, right, reclaim order block that you guys are trading, right, is rubbish. It's absolutely rubbish, right? Because this looks absolutely perfect, right, in terms of pattern with your perfect order block, right, point of interest, a perfect inducement, and then price is actually coming to it. Will price actually buy here? Yes, but will price actually get to the intended level, right? Meant for that structure? No. Why? Because you're trading against the order flow. And you're not supposed to trade against the order flow. You're supposed to trade in line with the order flow. So this is the reason why some people will see this and then would want to ask, I see a whole lot of people marking these out and they are cashing out. But why is that whenever I use it, I'm not cashing out? I'm not making money from this. This is absolutely the reason why. You're trading number one against the structure. You're trading against market structure. You shouldn't trade against market structure. You should trade in line with market structure. So trading this way is absolutely wrong. Once market makers have shown you the reason why they want to go lower, you follow them to go lower, right? And this is the reason why you have inducements to the other side, right? Something like this. This is the reason why you have something like this, right? And then a sell to the downside, and then a continuation, and then so this is much more safer. Now, I would want you to go to your chart, right? Go to your chart and take a look at every time you try to trade against the order flow or the structure, how price struggled to actually get into your direction and then finally violated your setup. And then take a look at how price reacted the time you traded with your order flow, right? With the market structure. So this was a perfect sell to the downside, breaking what structures, right? Breaking structures and getting to your intended direction. So I believe this is actually clear, right? So let's get into the chart. Please don't repeat this mistake again. This is absolutely wrong. Doing this here is absolutely wrong, right? This is absolutely wrong. This is absolutely wrong. This is the correct way, right? This is absolutely wrong. So let's get to the charts and let's see some examples, and then call it a day off for this topic, right? So the sessions are going to be quite short. Just hit it and then we're done. Okay. Okay. This is V25. Okay, let's just use this one. Let's just use this one. I love the structure here because this 4 hour time frame, it gave us a bullish narrative to a bearish narrative, right? And it also has the example that I spoke about, right? So let's take a look at this. So we had what from here. Let's just use this from here. Price it what broke the structure. Price broke the structure. So this is your shift. This can also be your shift, right? So this is your shift. We're just starting from here. I'm using this as an example, right? So this is your shift. Uh, let's take it up. Right. So this is your shift, a retracement into a level of demand, right? So a level of demand, and then your break of structure. So the upside. So this is what a perfect market structure. So it means what? We need to keep going towards higher. So at this point, right, you have no business trying to sell. Now, let me show you something. In as much as it's a 4 hour, I see some people still make this mistake on the 1 hour time, on the 15 minutes time frame, sometimes even the 10 minutes time frame. Right, now take a look at this. Some of you will mark this, right? Mark this, call it your inducement, right? And then you draw this out, right? Mark this out. And then you say, wow, my setup is playing out. Where's your TP? Here. Only for price to do what? Sell to this very level and continue higher. Why? Because we've established a narrative here. This broke structure, retraced, broke structure. So you should be expecting a little retracement at least below the 50% of this range, right? And then a continuation, breaking more highs and respecting lows, right? So this is absolutely wrong. Though you can scalp here, but This is you literally trading against the order flow. I don't do that. And I advise most of my students not to even do that as well, right? So we had a retracement here, right? We'll talk about breaker blocks and fair value gaps, right? So this is a clean point of interest. Broke this structure here. So we broke this structure here again. So what are you expecting? For price to do what? Retrace and keep going higher, right? Broke this structure here. So price used what? This fair value gap in correlation with what? An engineered liquidity to keep going higher, right? So I'm just going to zoom it in a little bit for you to see properly. So this fair value gap is here, right? And then we broke structure. So this is just the introduction, right? So in our next class, next week, right, I'm going to go much more deeper into a whole lot of things. So broke structure, this low broke the structure, traced, broke structure, retraced, right? To mark all of this here. So we broke structure. Broke structure. Now we're having a shift, right? And what does a shift means? A shift means um price trying to tell you, okay, we are transitioning from a bullish market structure into a bearish market structure. That's the simplest I can go, right? This is me actually making it very simple and straightforward, right? We're transitioning from either a bullish market structure to a bearish market structure, or from a bearish market structure to a bullish market structure, right? So to make it much more simple, I'm not going to go into a whole lot of details, right? I'm just going to use this one, this very low here, right? But you can use this. This is where it actually started. But for the sake of this session, I'm going to use this very low, right? I'm going to use this very low since we are treating just pure structure, right? I'm going to be using this very low. Or let's use this low, right? Let's use this low. So price did what? Sold. Let me teach you narrative a little bit. Price sold, right? Broke this structure. Now, few of you might want to buy, right? It's actually no wrong trying to buy here. That's actually the reason why I wanted to use this very low to give you a proper confirmation, right? But let's use this one here. Now, a whole lot of people would want to buy here. Now, this is where you know that, okay, we've transitioned from a bullish market structure and we are currently in a bearish market structure. When you see that this high fails to break above this high, right? And then fails to break above this very high here. Now we are respecting this very high, right? Respecting what supply level to hunt for what demand level, right? So we're taking out lows. Now, so this is no longer valid. Now, here is your confirmation one, right? Brook structure, respected this level, failed to break above this and failed to break above this. And then brook structure again. So to an extent, this is your shift. And then this as your break of structure. Can you see how easy it is to mark this on the synthetic market, right? So this is your break of structure to the downside, right? And then we had a what? Retracement with what? An engineered liquidity. And then we had a what? Break of structure. This high broke what? This structure. Can you see that the sketch I showed you, right? is actually what you are seeing on V25. I do tell people, right, the best way to actually learn structure and liquidity is on the synthetic market. Once you've mastered how to actually do this on the synthetic market, because trust me, the synthetic market is quite tough, right? But once you've mastered it on the synthetic market, trading currency will be a lot more easier. And once we go deeper, you're actually going to see it for yourself as well, right? So my job is to simplify all of these things for you, right? And then make you or help you trade efficiently. So we have a what? A gap here, and then we're selling to the downside, right? And then a break of structure to the downside, right? So we're currently at the current market price. So take a look at this, right? Now imagine someone, imagine someone wants to buy, okay, let's use this guy here, right? You've seen that this structure has been broken. One, this very structure here, right? You've seen that this very structure here has been broken. And then you still want to come and buy here. You ask them why, they'll tell you it's because this other block is very, very visible and is a very nice place to buy, except you're a scalper or if you are trading in a professional way, right? Not in a professional way, but if you're a day trader, right? You would agree with me that if your target is here, you are definitely hitting stop loss, right? Or if you are someone who uses break even, you close your trade at break even, right? To tell you that you are actually at the wrong side of the order flow. Take a look at this, for instance, as well. Can you see that this kept violating the setups? Can you just take a look at this? This was a perfect order block plus fair value gap, just respected it a bit, and then sales. Now, let me tell you something. In as much as I'm going to be teaching on, okay, I don't want to go ahead of myself, but let me just say this. In as much as I'm going to be teaching on the PDR array, right? The PDR array will always or only work out well when you are in line with order flow. If you are not in line with order flow, forget the PDR array. That's the reason why a whole lot of people will be saying SMC does not work on synthetic market. Why? Because you are applying the PDR array at the wrong side of the market. If you apply the PDR array at the right side of the market, you see how effective it is. Breaker blocks works here, right? Once you are at the right side of the order flow, fair value gaps works here. Your void also work here, right? Mitigation blocks also work here, right? Other blocks, you can find it literally everywhere, right? Why? Because you are in line with the order flow. So I want you to study this properly, right? Once we get into our next class for next week, right? I'll go way, way deeper into the explanations, other explanations, and then um, you'll begin to enjoy trading synthetic markets, right? So I believe with this, you can actually pinpoint a whole lot of mistakes you usually make on the synthetic market, and then you start correcting them this night, right? So study this, right? If possible, right, you can drop a whole lot of charts on the comment section. I will take my time whenever I'm less busy. I will take my time to go through them, and if possible, even correct you, right? Since this is a public mentorship, right? In as much as I can correct um I'll correct my capacity, right? Because I might have a whole lot of comments, right? So I want you to study this, right? Study this and then don't just use V25. Go to your chart, study and annotate it, make a lot of templates for yourself, right? You're going to see how effective this is on the synthetic chart, right? So see you in our next class. I hope you found value, right? Just let me know in the comment section. So see you in our next class and thank you.